Hey everyone, and thank you so much for inviting me to be here. My name is Lindsay Knight. I think this should be a fun hour or so. I am a partner at Chicago Ventures. I think we'll get into this more, but we're an early stage venture firm, generally invest at seed, invest all over the place, despite the name, very early stage. I spend most of my time post-investment, so working operationally with portfolio companies, which is a lot of fun. We could talk about more. I'm also the founder of an organization, nonprofit called Chicagoland, which seeks to diversify venture and tech in the city of Chicago. So I would say, maybe that is my inspiration to be here today, not to piggyback too much on opening comments, but continue to bring awareness to what's going on in the venture ecosystem, showcase folks maybe like myself that have kind of a non-traditional role and a little bit of a non-traditional path to venture. So thanks for inviting me.
Yeah, so this is Mel Flowers. I'm with Accenture. I am actually here in dual roles. I'm actually one of the legal leaders for our Midwest operations, where we drive all types of technology transactions, whether it's artificial intelligence, robotics, cybersecurity, you name it. Accenture is at the forefront of working in that space and helping others to adopt those technologies. I wear multiple hats, and one of the other hats I wear includes, of course, I'm the Chicago lead for our Black Founders Development Program, which is a program we developed last year to focus on, improving or at least resolving some gaps that we see in the market as it relates to investing in diverse startups, in particular Black startups as well. We looked at that and the amount of VC money that was being allocated in that space, and we want to try to make a difference. And so we've been driving this program since last year with various partners to make a difference on both sides of the table, both startup and also investor side. So that's what's got me here, right? One is just simply being focused on educating, bringing awareness, bringing more diversity to this space. And of course, I have deep ties with IIT, and that's another reason as well. So there you have it. Thanks so much.
Yeah, hey everyone, my name is Samir. I'm the co-founder and executive director of Fifth Star Funds here in Chicago. So we're a new venture philanthropy fund investing in Black-led startups here in Chicago at the friends and family stage. So kind of what Melvin was speaking about, what we're trying to tackle is the lack of funding going to Black-led startups in the VC landscape, starting here in Chicago. So our model is also unique in that anyone can contribute to the fund as a tax-deductible donation. We'll invest in startups, but all the returns actually stay in the fund. So our goal here is to build a flywheel evergreen fund. So we don't actually have LPs or external return structures. We're kind of unique in that way. Prior to Fifth Star, I was the co-founder and CTO of a startup called Tap Commerce. We were acquired by Twitter. I spent multiple years at Twitter in the Bay Area, also spent some time abroad. So I've been kind of on both landscapes and kind of the whole life cycle of a startup journey. But yeah, I think with to kind of why I'm here, or why I'm passionate about this, I think I care very much about helping people build pathways into tech and exposure both on the investor and operator side. And so I think it's only through exposure, understanding the opportunities that exist, can we build those pathways. And also I think for me personally, acknowledging like privilege I've had in my background and wanting to support people and give people a shot at building a business. So that's why I'm here, and I'm excited to be here.
Fantastic, thank you. And it's great to see so many of you in the room. I didn't really discover the whole landscape around startups and venture until I was in my mid-20s in grad school. So I'm really glad to see all of you there. To give you a little bit of background on myself, I've been doing tech venture capital investing since I graduated from business school in the late 90s. Currently, I'm a partner at Impact Engine, which is an early stage funder at the seed and Series A stage of software businesses that are driving positive social and environmental impact. So given my background, I tend to focus on the deal side, the investment side, and investment decisions. So we have a team at Impact Engine similar to the one that Lindsay leads at Chicago Ventures that works with our portfolio companies. And inspiration today, I teach students at the graduate school level on early stage impact investing, and I mentor entrepreneurs, and always looking to fill the pipeline of talented both entrepreneurs and investors who are impact minded. Also really inspired by some of what we have experienced over the last year and a half. For you, it's a very formative stage of your life, but I think has really highlighted some of the disparities in the US in terms of health equity and economic opportunity, and inspired to solve those problems, particularly through young talent like yourself. So really glad to be part of the conversation today. Yeah, I'll share a little bit of my story because this is not where I thought I would end up when I was in undergrad. I ended up, my undergraduate degree is in some ways much more useful, in some ways much less useful than the ones that you are likely getting. I had an undergraduate degree in psychology. My parents are both scientists, though both academics. And when I graduated from undergrad, I sort of ended up randomly in the technology industry at a firm called Gartner, doing analysis of trends in the industry and advising purchasers of technology sort of where to put their dollars to create more future-proof technology decisions. So I got to look at technology landscapes and see, develop a viewpoint on what I thought was going to happen in that landscape over the 5-year planning horizon. And part of my time at Gartner involved looking at new spaces, innovative spaces, including startups. And I really loved the whole process of trying to figure out who did I think was going to be the winner and why. But I had no interest in staying an expert in that space. So I ended up going back to business school, getting a graduate degree, got that degree in Silicon Valley, where I was sort of at ground zero of the venture industry and startups. And then was really fortunate to find a firm based here in Chicago that I joined and became part of their software investment team. So it was a little bit of luck, a little bit of being in the right time at the right place, with a skill set that I could sell as valuable in the industry. So I'll stop there because I'm really curious to hear how others got their foot in the door.
Okay. All right. So, and thank you, Tasha, for going first, because you helped to clarify the question for me. So thank you. so this is Mel. So again, my day job, it's multiple, right? One, of course, is largely providing legal counsel for the business, but also doing many of the deals, right? Whether it's minority investment in corporations, whether we're doing post-merger integration, tons of acquisitions, doing the due diligence, as well. But then, of course, because of what we started to really do as of last year, now leading this initiative, right, to identify startups, to grow the pipeline, right, to create the partnerships, and to also coach, mentor, help to move these companies along the continuum, from simply ideation to an actual product and distribution, possibly taking a seat or a position on those particular companies, or possibly outright buying these companies, right? So we run through all these different, elements of acquisition or venture as it relates to these particular companies. Now, again, for me, it was largely doing the actual deals, right? Working alongside of our venture and acquisition team, doing what we call bridge programs, right? Where we look at companies who may have an idea, but they don't have a company, right, or a product built around it. And then we start to bring that to market. And then we do, much like folks who go to an auto show, create prototypes. And then we take it out to our clients and see, if they like it, kick the tires. And if so, we'll go into production, with them. So there are all different kind of ways to do this. And I love this about Accenture because we're always doing something that's cutting edge. And so we would look to do that. Now, I also ran our strategic alliance legal team as well, right, which is global. And so that was largely transactional, where we would look at the largest technology partners and we would look to create new intellectual property. And then we would look to then go to market selling those things. And sometimes we realized that, maybe we need to create a business together. And so then we would do that. And so with some of the largest companies in the world, I won't name who they are, we would create joint ventures, or joint business solution groups as well, to go to market selling new and interesting software applications. Some could include software and equipment, just really interesting ideas. And as new technologies would come on scene, we would look to integrate these and create these bundled applications of technology and then sell them. And we just recognized it was probably better to merge operations with people, assets, intellectual property, and go to market together through different joint ventures or through strategic alliances, which was largely contractual. Now today, what we saw, and I will tell you largely when you think about Accenture, where we are, we looked at what was happening last year, right? When you saw all the protests, and I'm going to tell you this, you saw tons of corporations that really got motivated because of what they saw. We've always known that there's incredible ideas, incredible opportunity for innovation, And I think it just really jumpstart, the action, if you will, right, within Accenture to say we need to do something about this. We know that we've been investing largely in companies. In fact, if you looked at the news, Accenture at the beginning of this year and last year was noted as the most acquisitive corporation, right, especially from a tech perspective in the world, right? And so that means we've been buying like crazy, okay? We've been investing like crazy, but we still miss the mark as it relates to, Black tech founders, right? So that's why we're very intentional about this area, pre-seed investment, early stage, focusing on really promising technology across the technology spectrum. And so how that happened was simply them understanding the types of deals, me raising my hand, and them saying, we're going to interview tons of Accenture leaders and identify who's going to be best positioned to do this. And Mel was the person who was selected to drive this because of my relationships here in Chicago, because of all the interesting things that I've done here, and then the telecom space, also the types of deals doing it with Accenture, the relationships that I developed with all of our partners, right? And it was just a beautiful merger of all those things, if I can tell you that. So sometimes it's just great to continue to elevate your career, to do different things outside of what your core discipline is. Be curious, because many of you have different assets beyond what that core discipline may be. I'm a lawyer, but I'm a business-minded lawyer, right? But I'm also a tech lawyer, which means I love technology. I also have a technical background, which is why I went to IIT years ago, because of the technology. My undergraduate was actually marketing, right? So it was industrial marketing management, but it also had a computer science component to it as well. So I love the psychology of marketing, right? And then of course, but I understood where technology was going to go, even a student in the 80s, right? So I can tell you right now how old I am, but I enjoyed that. So marketing with a concentration of computer science.
Yeah, so I started my career as a software engineer here in Chicago. And I left actually about a decade ago to go to business school. And actually, I thought at that point I wanted to go into VC. But luckily, I think luckily, I met my co-founder Brian in business school, and he convinced me that I should not go into VC. I should build a startup instead. And I think in retrospect, I think he just wanted a technical co-founder. But I'm really glad that happened because so I started my company when I was in business school. But I think what I learned over time, and I think this relates to what Tasha said, was I think to be an effective investor, like you do have to be bringing something to the table. And I think in my experience, it was being an operator and kind of being on the other side of the table. Because I mean, I will say in VC, I think I don't know, I can be PC about it, but I think sometimes there's a low bar. Like I think to be like actually a really good investor involves being empathetic, right? And sometimes you might see there's a power dynamic that be at play in certain like VC meetings, but like the way we approach our work at Fifth Star is all of us building at Fifth Star, we're all actually former founders ourselves or operators. And so I think that for me gave me a skill set from a product perspective, but also how I can approach actually being a good investor. So and I think beyond that, I would say too, like once I started my company, went through that. I wasn't even sure at that point, even recently, if I wanted to go into the investment landscape, but I think what got me there was leading with my values and knowing what I and seeing kind of what Melvin described as well, the aftermath of the protests last year and the lack of funding going to Black founders. I feel like this was a problem I wanted to be a part of solving. And so then that kind of led me to that. But I wouldn't say it was because I wanted to be a person writing checks to business founders. So so I think if I could summarize, it was finding what could be a skill set I could bring to the table. And I think in my experience, it was being an operator. And then second, I think leading with my values and then that leading to this position.
Yeah, happy to. So I've been at Chicago Ventures since 2014, and just hearing the three of you kind of talk about career paths is just making me reflect on this question, which I think a lot of us answer in a lot of settings like this. And for the folks in the room, the more you hear VCs talk about career paths, the more you're going to hear this like non-traditional kind of circuitous route. I think one common thread is an operator background. More and more, especially over the last 15 years or so, there has been a trend toward people getting into venture that have operated in some capacity because of the empathy piece, as Samir referenced. So just kind of some interesting dots that I've been connecting as you all have been talking. So I have a non-traditional background. I graduated with undergraduate degrees in strategic communication and journalism. So I thought I was going to do marketing, like Mel mentioned, or content or journalism or PR or something when I graduated. I ended up at a very small kind of digital communications agency after college. I ended up working, somehow finding myself in the intellectual property industry for about 6 years before I got into venture. The kind of common threads that I have been able, in hindsight to pull together about those roles, I will say in real time, you're not really feeling, or at least I personally wasn't feeling, this kind of strategic step toward venture capital. I had no idea I would end up in venture capital in 2014. And now it's, been 7.5 years. But common threads I've been able to identify that I think have been helpful have been, I've always worked for small companies. Venture capital, maybe we'll get into this, but like, it's not, if you're at a smallish firm, you're not going to come in, whether you're a partner or an analyst, and someone's going to say, okay, here's what you have to do. Here's your KPIs. Here's your marching orders. It's, we got to make good investments. We've got to find the best founders. We have to return money to our LPs so that we can do this again. Figure out how to do that. So being at small companies kind of put me into position where I was like, I don't know, I just kind of go out and you figure it out. You learn on the way. You do have a high tolerance for risk. And you're kind of open to, routing your own way, which has, I think, served me very well in venture. The other thing I'll mention is I've, for the most part, always worked in kind of services businesses. So even when I was in the kind of this intellectual property investment bag, for the most part, it was mostly services driven. We were building some products and launching them kind of on the side, but services driven stuff where we had, customers and clients that we were working with. Venture capital is a services industry. Like, yeah, we're selling money. We're selling our brand. We want to help founders accelerate. But for the most part, it's a services business. I think about the founders in our portfolio as our customers. And so I'm constantly asking myself, how are we better serving our customers? That's post-investment. That's before we invest. What are we doing to make sure that we are, known and people understand who we are and what we do, and we're building good relationships and all of these things VCs kind of talk about down the line. So again, it's kind of interesting it's always interesting for me to reflect on these paths that we've all taken, because they were not usually the most intentional. I would say, if venture is interesting to you in the long run, like building a personal brand, whatever that means for you, building a network, having conversations, being curious, understanding or seeking to understand things deeply, things that interest you. Curiosity are always characteristics that VCs are looking for in folks that they're bringing onto the team. Venture is a network-driven business, and it has been, and we can argue whether it should or shouldn't be, and that is, maybe a longer conversation. But the more people the more relationships you build, the more founders you're going to meet, the more talent you're going to meet for your portfolio. It's network-driven in this interesting way that some other industries are not. When we at Chicago Ventures or any of my other colleagues on the panel are bringing somebody onto their team, the first thing that we think about, and I would guess many other VCs too, is, okay, how do we find somebody that has a different network and different perspectives than us? Because they're going to be highly additive to, even if we're just talking about deal flow, the deal flow that we are seeing. And so if you hire somebody who has the same background as you or looks exactly like you, or whatever it is, kind of go down the list of kind of these different ticks we could check off if we're talking about just like the D in DEI and diversity. It behooves all of us in venture to add people to the team that know people that are different than us, or that can get into a community or a network that is different than one we're already in. And so, I think that is, as you reference, different backgrounds across all the students, across all the people in the room are always going to be additive. I think, you got to figure out how to tell your story and how to sell yourself, so to speak, if you're looking to get into venture, but that is something that is highly, highly attractive to venture firms.
Yeah, I would add to that. I think that's right. First off, you got to find those cluster groups, and they're there, right? So that means that now we've got to be intentional, right, about looking in different places, right, to find those opportunities, right, to partner with, to invest in those types of companies. And they're out there, right? We've also got to understand that too, once we find them, though, that because of how things have traditionally been done, we've got to support them more, right? And that's why for Accenture, we've been doing this for some time, right? While we go out and we're a big tech, professional services multinational, Growing inorganically through acquisitions has been one of the things that we do because technology is changing so fast, right? And to get the skill set, you just can't train people fast enough. So in many cases, you have to buy the talent, which means you buy the businesses or you invest in those businesses, right? But we also know that, every business is not for sale, right? So that's why we'll do investing in those businesses as well. So the venture arm for us is very large. It's a very significant portion of our business. Recognize that in this space where there has been little attention, there's a reason why we know that. For instance, if you say $180 billion was allocated last year, but only less than 2%, went to Black firms, right? And this is not just sort of a coincidence. It's been something, a trend that we've seen. So we also know that once you get the money to them, that you've got to help bring them along the continuum as well through mentoring and coaching and continue to create those cluster groups and sometimes being intentional about building their network with them and sometimes helping to guide them as well, which means you may take a position in their business to help control and guide them as well. So I do think, though, that there's got to be many things that we do beyond finding, the potential opportunities. The other piece is how we nurture and grow that relationship and be really, really intentional about that. And so that's one of the ways I think that we have helped to make them very successful.
Your question, maybe I will address it from the perspective of the student, trying to put myself in all of your shoes and sort of how do you sort of prepare yourself for conversations in the industry and building your own network and connectivity. Because venture is a space that has its own language, its own lingo, its own, kind of culture and context. And I think it's really great that you're all here kind of getting familiar with some of that. But I think someone earlier said something about being curious. And I think that's really important. You read, you attend events like this, you watch, videos, you follow the trends in the news in the industry, and you kind of get a sense of like, what are the investment themes? I think there might be a question about that later. But, you get a sense of like, what are the hot areas, what's happening in the industry? And you pick your lane, like, what are you most interested in? What can you build expertise in? And I think it's really important to just, speak the language, get smart on how the industry works. And I think you also have to have a certain amount of patience and persistence, right? Because for venture funds, they typically hire around their fund cycles. So you have to catch a fund when it's about to raise a new fund and it might be growing its team, or somebody's getting a promotion and then they're bringing someone younger onto the team, more of an up and comer. So you have to be patient, you have to be persistent and build relationships. A great story that I like to tell of someone who was actually a student, an undergraduate student, who really, really wanted to get into impact investing on the venture side. And he literally would show up at every Impact Engine event. And he was super polite about it. And he would just say hello. And he offered to do projects with some of our portfolio companies. And he had such a nice way of interacting. And he was like top of mind that when we, opened up a position for someone, who was more at the analyst and, early career, who was willing to do really jack of all trades, any kind of work, we said, how about that Connor? Like he seems really serious about getting into this, and like, let's give him a chance. And we did. And, he ended up working with us for a few years and ultimately went on to take an operating and sales role at one of our portfolio companies. And now is at a sort of big, well-funded ed tech leader. And it's so awesome to see him having taken that career, but it took some patience and persistence and, doing it in a really nice way and building your network. So I would just encourage you to, to be thinking about that and staying current and following what's happening in the industry and, just staying out.
That was really great advice from Tasha, especially from the student perspective. I had a few on that note. Actually, I'm going to plug Tasha's firm, Impact Engine. So I know Chris Wu on the Impact Engine team is creating like a venture scout program. And so I think, these are kind of these new initiatives to kind of expand the funnel for funds, but actually like trying to get individuals perhaps early in their careers to be a part of it. Because I think especially from folks who come from a diverse background, there are these like nodes of networks. And I think that is a great way to expand a funnel for funds. So I think you'll see more of those coming up. I would say actually, then like in terms of funds that perhaps could be a fit for you, I think actually like doing the research of like looking at the makeup of the team, seeing where they actually are investing right now. And I think a lot of these new funds are trying to have a better focus now. I think for some of the ones that are much older, I think it maybe can be a challenge, even though I think that many of them are trying. But I think it's easy to see actually where people are actually investing right now. I would say also, so I mentioned like the operator path. I do think that's also a good way to break into investing, because you can also then build relationships with investors that way. So if you're an early employee at a startup, say, I mean, I think being mentored by the founders, but also then being introduced to investors, I think that's a great way as well. And I think, luckily Chicago has a very thriving, growing startup community here. I feel like I can write a novel regarding how to be better from the investor side, but I think I think what I'm finding though, especially as we're building Fifth Star, we're trying to build a process where it's as objective as possible. Like, what are actually all the dimensions that we're actually evaluating on? How can we actually structure our interviews so we're removing racial biases that exist, both conscious and unconscious? And how can we actually supply this information to founders so that they're well prepared to be successful in the meetings with us? And I think like a lot of it's also not pattern matching anymore. So now looking at, do they go to Stanford or certain careers? And maybe one last thing I'll add too is actually being of help to founders that perhaps aren't ready for investment right now. So actually giving feedback and what are we actually doing to help them be investable if we really care about the ecosystem as a whole, kind of I think related to what Melvin was saying as well. So some points from both the student side as well as the investor side.
Can I reference something that Andre asked in his question, which was a perception that, you have to be really rich to get into VC, which I certainly had that perception of. It's just this strange industry where that historically has been kind of what we've all thought about it. That is highly not true. There's certainly like maybe potentially some bars that you have to cross to start your own firm. But I think something to keep in mind is, I would say all of us, at least on this panel, are not necessarily in venture, quote unquote, to get rich. It takes VCs a lot of time to make money for the most part. And so I think as a candidate, being, especially for new firms like Samir's, being kind of empathetic to the fact that a first-time fund is out hustling too. They are probably not paying themselves very well, certainly not as well as they would get paid if they were at, a big Fortune 500 or even a startup. They're out raising money too. They're looking for folks that are gonna hustle and be out, getting stuff done and helping them out how they can. They're building a firm. It's not the same as building, a product-oriented startup, but I think it's just something to be mindful of. Now, if you're talking to, like Benchmark or Sequoia or some of these firms who've been making, billions of dollars for decades and decades, it might be a little bit different. But if it's kind of the earlier stage new firm route, kind of showcasing the fact that you understand that and you're like, yeah, I will do anything to help you out because I know you're working hard at it too.
Is this a speed round? Because I'm going to go digital health and fintech.
Okay, I'm going to say applications. There's multiple really, but applications that deal with artificial intelligence, things that deal with predictive analytics. So big data is still hot. I would also say use cases built on blockchain.
I will plus one, Tasha. That may be cheating, but yes, health and wellness, mental health, women, I hate saying femtech, women's health, because, but this whole industry that kind of touches women specifically, but I'll also tack on transportation, logistics, supply chain, especially over the last couple of years.
There's another one I would add to that. I think that is really growing because there's a big problem when you think about it. When you think about the future of food, as an example, and you think about soil or soil regeneration, you're seeing agriculture. And I think, things that are built around agriculture, around clean water, the environment becoming really, really major. And you can see it when there are the conversations at Davos and other places right now that the world leaders are dealing with right now. So that's a big problem, which means there's incredible opportunity, right, in that space.
I like the speed lightning answers. I'll say one, it's I would say like no code platforms, but specifically, and it's just interesting because I'm a software engineer, but I guess I care a lot about products that can actually make software engineering obsolete. And so I think that could empower non-technical people to start businesses, but also within larger orgs, non-technical teams to actually not be blocked on engineering. So anything that, allows you to build a product without actually having to write code is, I think, a really interesting area.
Does our answer just everything?
Yeah, it does. But that's a really good one, Samir, because you're right. That's a good one.
I think like the best industry and market to go after is the one that the founder A is most passionate about, and B maybe has a little bit of experience or perspective, or just like insight in that others don't. So, I wouldn't necessarily say if you're starting a company, like say like, oh, this is a hot sector, so I'm going to start a company in it, because you're going to have to be highly passionate about that industry and that company for many, many, many years.
I'm going to just like tag team on Lindsay here, because being at a startup is hard. It's hard in the early stages, it's hard in the growth stages, and you're going to be working your butts off, and you're going to be having to run through walls and overcome adversity. And so, what's hot in this space, because digital health has really taken off and been accelerated by the pandemic. And, what Lindsay mentioned too around mental health and social emotional health has been, taking the center seat. But if you're not passionate about that, you're not going to have the power to run through walls and do anything. And at startups, you might be building code, you might be taking out the garbage, you might be, interviewing people because they're in such high growth stages. There's just a lot. And I think you have to do the things that you're really excited about, whether it's from a technology perspective or from the perspective of the problem that you're solving and aligning with customers. So maybe I'm going to go +2 on that, something you're passionate about.
Maybe +3 says 1 ditto, right, to you both. And I'll tell you, just even in doing coaching, I challenge people to say, is that really what you should be doing, right? To be an entrepreneur, right? Because when you think about a lot of this to be successful, mission-driven businesses, being passionate about it, but also looking at yourself, like what are the things that you do? What are your strong suits, right? To really drive a successful startup and to have a sustained startup, right? So this is why disciplined entrepreneurship is a really, really important thing when you start to think about it. So that's why you have to really look at all the things that you're good at. And if you're not, can you build that team, right? That's really good at it, right? And drive that team to really think about whether or not that's the space for you.
I can go first. So 1 sentence, I'm limited to 1 sentence. Can I say and could there be commas?
Yeah.
I can do this 1 sentence. I would say for the most successful founders that I've seen, they are usually more passionate about problems than they are solutions. I'll leave it at that. Wow.
Yeah, I'm gonna combine 2 into 1 sentence, but I think they go hand in hand. One is we say that we look for founders with earned secrets, meaning they know something that everybody else doesn't. At the early stage, they are the ones to, see this thing through. And 2 is going to sound really simple, but it's, can they sell? Can they, sell their company to potential employees? Can they sell it to investors? Can they sell it to customers? Do they have that DNA?
I think that's a great one, Lindsay. And I think maybe to sort of bridge the gap, a learning orientation is really important. I mean, one of the things we talk about at Impact Engine is trying to find entrepreneurs that have the balance between the lean startup mentality, where you literally might end up in, spinning around in circles based on whatever you heard last, but you also can't be at the other end of the spectrum, which is the unreasonable man, where you're so convinced that you have it right and everyone else is, just doesn't recognize your genius, that you're not listening. So you have to have, I think, enough of a compass and confidence, but need to be listening to the market. So I think it's sort of the right balance of those things, and the willingness to learn and iterate and get better and recognize what you're good at and recognize what you're not good at, and attract great people, great customer, great resources, great investors. That was more than a sentence. I broke them all.
Yeah. So your last part took what I was going to say. I everything that everyone said, I agree with. And I was going to say the same thing. You got to know what you're really good at and what you're not good at, right? Because you got to know when you got to pull back and bring in other folks that have a competence beyond what you have, right? To drive that business forward and to sustain it. I'll stop there.
Yeah, I could jump in here. I would say the mindset to have is to know that you're going to get a ton of rejections, maybe 100 rejections before you get your first one. And that is especially part of the game as a founder at the very early stage. But I think even when you're trying to close clients, if you're trying to build a B2B business, I think that's, just get used to rejection. And then, I think I made my point.
Yeah, you did. And so the mindset, I would say is you got to be resilient. What Samir said is spot on. There's going to be tons of rejection. So get ready for it, right? Don't take it personal, right? Just take that feedback and figure out how do I iterate, right, to address that, but you got to believe in what you're doing. You got to keep pushing it, but just know that there are going to be tons of rejection. So I say resilience from the standpoint of mindset, okay? Yeah, I'm gonna go back again to, it's like, it's something that Lindsay said earlier about selling, right? You're always going to be selling no matter what you do. So one, have that mindset of being resilient. And now you got to take that and put that into action, which means that you got to keep on. You may be told no here. You got to keep pushing. You got to ask for feedback. You got to figure out, what do I need to do, right, to improve? What do you need to see? But you got to keep talking to others, because there is someone who's going to believe in what you're doing, right? And they're going to connect with what you're doing, right? You got to believe that too. But you've got to constantly get that feedback in addition to the rejections, and then continue to iterate whatever your proposal is, your idea, to give them what they need.
Yeah, can I add one more thing too? I would say, don't waste your time on people that are not going to believe in you. Like, don't chase that. Try to find out who those champions are early on, because I think your most valuable resource as a founder is your time. And then if other people want to join in, once you get momentum, they'll feel the FOMO, and then they'll come in later.
Yeah, great point.
Yeah, not much to add. I was just going to basically say what Samir just said. So quality over quantity when it comes to conversations and building your network, whether it's your investor base, your advisors, your maybe your customers. Focus on quality over quantity and your time too.
And I'm gonna maybe tie this back to some of the comments at the beginning about just the resilience and the being willing to be persistent. I mean, I ran the numbers literally just the other day. We had 1,400 companies enter our pipeline in the last 12 months, and we made 4 investments. And I think you are far, far better off just being really targeted and thoughtful about who aligns and who you want to work with. And that's going to show through in those conversations, but also recognize that, others are going to have preconceived notions. So trying to appeal to everyone is sort of a formula for appealing to no one. And so you want to find out and figure out and do your homework on who's the right funder, who's going to appreciate your perspective. And it might be based on who they are or what they know or where they've been investing. And so looking at those clues and really being thoughtful about who you're reaching out to and how you're reaching out to them, I think is going to increase your odds of success. There is a power dynamic that we talked about at the very beginning of the conversation, which is at work, and it can be very, frustrating. But I think you have to be thoughtful and targeted and try to be, persistent in the face of all those no's that you're going to face as an entrepreneur. Because you know what? Maybe they're right, but there's a chance that they're wrong. One of the very first companies that we funded when I at my firm is a company that had literally they showed us the spreadsheet afterward. They had literally talked to every investor in Silicon Valley and who had turned them down. Now, this was before Chicago was the tech center that it is today. But this little fund out of Chicago wrote them a check, and it ended up being a 70x plus returner for us. One of the biggest, investments and sort of most successful investments that we made. So just know that if you're onto something, like that 100th or 200th investor that you talk to, might be the one that believes in you and gives you that chance to drive success. So, anyway, hopefully you'll find that encouraging and not too discouraging, but you're gonna face that if you end up on the fundraising trail for sure. The job of the venture investor, once they have made the bet on you, is to help you be successful. And that means helping to surround you with great talent, great service providers, just sort of everything that you need to up your game. And so again, I think it's this fine balance between sort of signaling, hey, we don't have our act together. But I think it's very reasonable to say, hey, look, this is where we started. We were cash constrained. We'd really like to get world-class legal counsel, and can you make some introductions? And I will guarantee you that any venture investor worth their salt is going to have some great attorneys that they can refer you to, or some accountants, and so absolutely, I think every early stage investor is like thinks of themselves as being value add. You'll hear that term in the industry, smart money, dumb money. So I think you need to be sort of wise about how you position that, but I think you also want to be thoughtful about what is it that my company needs to be successful, and is this firm going to be able to support me in doing that? And Lindsay, you will probably also have a perspective on this.
Yeah, tugging at my heartstrings here. This is where I spend a lot of my time. I mean, there are different perspectives in the venture industry, I'll say, and varied perspectives about how, I'll just go back to the services thing, like how services driven you are versus how non-services driven you are. A lead investor, which we lead a lot, I know Impact Engine, I think leads some too, is going to take a board seat, be highly involved to the extent that the founder wants us to. So there are some founders that say, I've done this 12 times before, don't need anything, just kind of want to be able to call you at 10 p.m. when I need a shoulder to cry on or somebody to talk to. And we say, great. There are some founders or first-time founders that say, just what you said, Jesus, which is, I understand my product, I understand my market, I know how to hire. There are a bunch of other things that I might need a hand with. And what can you help me with here? And I love when founders ask that. I mean, we've had founders that have done interviews with us before they agree to take our money. They say, okay, we know that we're going to want some help with hiring. We know we're going to want some help with customers. What can you do for me? It's in many ways, it is a founder focused world, which is, I think, a great thing. And it's something VCs are continuing to adapt to, is how are we supporting founders? Maybe it's just an introduction to a law firm. Maybe it's help with coaching. Maybe it's help with D&I stuff. Like, there are many ways that VCs can help founders. There's a lot of bluster out there too. So I would say, if you are raising money, do references, when you talk to a VC, you'll see what they put on their website. You'll see what they tell you they do. Talk to their other founders and say, does XYZ, VC, do they actually come through with this? Or is it just a lot of smoke and mirrors? Because it's kind of the cool thing to do at the moment over the last maybe decade or so. So I would just do your research before saying yes to anyone who promises.
Yeah, that was great. I think what I'd also add too, maybe it's kind of a separate topic, but I think it's related. So Jesus, without knowing too much or anything about your business, I think what I also want to point out is, like, there's so many different ways of financing your business, right? So one path is VC. But I think what's important for the group to understand too, like, that comes with certain expectations in terms of like fast growth. And so a lot of that sometimes is a personal decision on the kind of business you want to build and like market you're going after. But I guess I also wanted to point out too, there's like revenue-based financing, like equity buyback models, other ones. I think actually that are, especially today in the last few years, there's been quite a lot. So I just pointed out, I'll say you might be a great fit for VC. I don't know, but I just want to put out that there's also other paths as well for financing.
I think that's a really important point, Samir, actually, because I have seen, because I've been in the industry through boom cycles and bust cycles, and in boom cycles, I've seen companies get funded where just the mere fact of taking on venture capital, because there is sort of a little bit of hero worship that we have around venture funding and entrepreneurship, but there's a lot of companies that aren't really a good fit for venture. And I've seen situations where when money is plentiful out there, that venture investors invest, but they have really high expectations for growth, and then they've got to exit it, and they've got 10-year funds, so you need you to exit within a time frame. And so as an entrepreneur, I think you should think long and hard about whether venture is the right fit capital for your business, and is it going to, because once you take venture investor, you're beholden to an investor that has very specific expectations around returns and timeframes. And as a founder, you may or may not, want to have those expectations placed on you. And when a venture capitalist joins your board, one of their jobs is to, assess, the leadership of the company, and you may or may not want that. You may want to build a great company sort of regardless, and you get capital and you find those that believe. But I've also seen companies that I thought could be great businesses, ended up, trying to, force themselves into this growth curve, and then ended up, having to shut down, whereas they otherwise might have been a nice business for those founders. So I just think long and hard about it.
Yeah, great points. And I'll just speak again from, let's say, the corporation that does tons of venture and has a venture arm inside. We do tons of deals. One, we absolutely understand that, especially many of our founders are extremely young, right? But they've got some incredible ideas and incredible innovation. So they don't know everything about business, right? And we welcome them coming to us saying, we probably need some assistance here. In fact, with the pipeline of folks we're working with now, we're surveying them to say, what other services could we assist you with? And sometimes it does include pro bono legal assistance. Now, maybe depending on how much funding they have or where they are as it relates to revenue generation, there may not be a pro bono component, but there may be, we'll work with partner law firms, right, that will help them in that area. For some, it could be pricing, it could be supply chain distribution, things like that. We can actually help them with that because that's what we do. So we look at all the things that we do and where we have extreme competence and how can we leverage that to help? Because again, I will say for us in our program with this Black Founders Fund, which is broader, but there is an element that we want to grow the ecosystem, right? Because we recognize that once we help grow that ecosystem, that everybody's going to benefit from it. So we are focused on trying to figure out how we can really, really provide some sustainable support in that space. And again, to your question, it could include mentoring. It may include coaching. We'll talk to you about where you need that coaching. It could include us introducing you to CEOs of various tech corporations, right, to build that network. It may not always be about the money, right? Some, much like Lindsay stated and Tasha stated, they may not need the money, right? They may be at that growth stage, right? They need coaching. They need networks, right? They need someone that can help them move things along. And we see that as well too. So it just depends, but absolutely. We would not see that as something that would, disadvantage you. We want to help you.
So we don't invest in idea stage at Chicago Ventures. We invest generally at seed. There's product and market, maybe a little bit of revenue, but plenty of VCs do. So I would look for pre-seed or maybe accelerator or some of the other models that Samir referenced. It is a thing that happens.
Yep, same is true for us. And also look at angel groups and angel investors. They tend to make faster decisions often if it's an individual and are more comfortable investing generally pre-revenue. But there are funds that define themselves as pre-seed and you want to focus on.
Yeah, I'll say we definitely do at Fifth Star, but I would say idea stage means something different than it meant 10 years ago. So I think what that means now is you've done validation, that perhaps you've used some no-code platforms to try to build something, hack something together. So if you haven't done that, I think you should, because that's something that is in your capacity to do.
Yeah, same for us. It's pre-seed. We're looking for something tangible. But much like Samir stated, we have different programs. One, of course, is a bridge program where we're working with folks who are just developing things in the garage, right? So they haven't created an actual prototype. They have an incredible idea that possibly could move to the stage of patenting. While we invest, we would have conversations to see how we can actually support that through the continuum.